So I have to wonder if AT&T's CEO John Stankey is following in the footsteps of some of our great CEOs that we've witnessed as investors by divesting their businesses of non-core assets like Ralston Purina's Bill Stirritz, who sold Jack in the Box and their ownership of the St. Louis Blues hockey team, which began their turnaround, and General Dynamics' Bill Anders, who sold the majority of the General Dynamics businesses, including their IT division, Cessna aircraft business, missile and electronics unit, and their coveted F-16 business to Lockheed. So this is the third stinky that Stanky, I think, is getting rid of, because they've already gotten rid of their DirecTV. They also got rid of Crunchyroll when they sold that to Sony, and now it is just about final. We got a few more details of the Warner Media merger with Discovery and the subsequent spinoff, which is indeed a spinoff and not an exchange, which would have allowed shareholders to get rid of all, some, or none of their AT&T shares. Now, if you are an AT&T shareholder, you don't have to do anything else. You will receive 0.24 shares of Warner Brothers Discovery for every 1 share of AT&T. So if you hold 100 shares of AT&T, you will receive 24 shares of Warner Brothers Discovery. They gave guidance on the new dividend, which they say will be about $1.11, which is down 47% from the current $2.08 dividend. Now, I think this is less of a dividend cut and more of a right sizing, but yeah, it is a technical dividend cut. This is because they're losing about $20 billion in revenue from Warner Media, and they're also going to be deleveraging that balance sheet, as well as investing, as management said, in 5G and fiber optic internet. Almost 30% of AT&T's balance sheet is going to be absorbed by Warner Brothers Discovery. And looking at that 0.24 of a share of AT&T, now just using today's number, we'll just call it $24 share price, AT&T would drop to about $18, which is in line with what a lot of analysts think, that the Warner Brothers Discovery shares will be about $6 to $7 per share. And if that is indeed the case, that $1.11 on an $18 AT&T share price will be north of 6%, like 6.17% in our little example here. So an over 6% yield. That dividend is going to be a payout free cash flow ratio of about 40%. So hey, even under 50%, I'm pleased as punch with. So just be aware that AT&T, when you receive those shares of Warner Brothers Discovery, the share price is going to drop. So it's much like when a stock goes ex-dividend, that the share will drop by the exact payout of the dividend.
May they make beautiful dividends together.
So AT&T will finally and completely be getting out of the entertainment and streaming industry. And I think this is good because they'll be able to get back to basics and focus on their core business, which is going to be wireless and internet. And you don't need me to tell you how big wireless and internet are. So what am I going to do? I may indeed be selling some of my Warner Brother Discovery shares. I'm going to keep a few as tokens of this time. I'll always hang on to a few of those as mementos, but I might be selling off a big chunk of them to buy just more AT&T, because this is a tough industry to crack. Netflix is so big. You have Amazon, Disney, over in China, Alibaba has, and Tencent, they're all in streaming. And if you look at the world, if we were to combine Warner Media and Discovery Plus, AT&T would currently be about the 6th largest streaming company in the world. And I did buy more AT&T because I think this is a really low risk, high uncertainty play. I don't think there's a lot of risk, and it's not an exciting company to hold. Yeah, maybe it's a bit of a boomer stock, but that's okay with me, because what we're doing here is we are investing for predictable, largely predictable, safe and stable, growing dividend income. I know this is a cut, but I like what AT&T is doing. I think it's a right sizing of the dividend, and I would love to know what you're doing with AT&T's shares. And if you want to check out the bridge portfolio on the board, head over to DapperDividends.com and click on my portfolio. There you can see 3 portfolios that we do share and update. And if you've heard a lot about AT&T's debt and it's got you worried, I'm not that worried about it, and I share that in this video right here. and it goes over AT&T's debt coming due. We take a quick peek, have a look-see at that. So head on over there if you'd like, and I will talk to you there.